All right, listen, guys, the market has been leaving clues for months and most people still don't see it. In today's video, I'm going to break down a few charts that are setting up almost identical to the runs we saw earlier this year. And if you understand what you're looking at, you're going to be ahead of 99% of people in this market. Let's get this video to 100 likes. First on the watch list is Alibaba, ticker symbol BABA. When you study charts long enough, you start to notice something most traders completely overlook. The markets always leave subtle clues before the big moves happen, and this Alibaba chart is one of those perfect examples. Every time price pulled back into a wedge, buyers stepped in early. You can literally see it through the series of higher lows forming inside this wedge. If you didn't know, it's because the smartest money in the market never waits for confirmation. They quietly load during uncertainty, the part everyone else avoids. And then what happens? The wedge starts to break out and creates higher lows. We saw that in February, we saw it again in May, and now here we are one more time inside the exact same setup. If you look deeper, volume is contracting during the pullback. That is one of the strongest signs of a healthy correction. It tells you sellers are drying up and not gaining control. So while the average person sees red candles, what I see personally is pressure building, momentum compressing, and a market preparing to expand again. This is why swing trading works, because true breakouts don't come from hype, they come from the actual structure itself. We're sitting inside a falling wedge, holding the 9 EMA, forming higher lows, and approaching the point where this will start to see some nice upside. Whether it breaks out this week, next week, or even next month, the pattern is the same one that happened the last two major leg ups. If you're thinking about playing this, don't be dumb and scale into short-term contracts. Those are for dummies. Make sure to scale into long-dated ones. Next on the watch list is Rivian, ticker symbol RIVN. We're now sitting at nearly 70% profit on the setup in the Discord, and honestly, the chart is doing exactly what we expected it to do. This entire move started at the bottom of that long consolidation zone, a place most people ignore because it feels quote-unquote boring, but boring is where the real money gets made. If you look at the setup, we have a massive multi-year falling wedge, a rounding bottom forming underneath it, price holding the demand zone for over a year, the 9 EMA finally curling up and supporting the move, and then now a confirmed breakout of the wedge on the monthly time frame. This isn't random. This is what happens when accumulation meets perfect timing. Once a stock spends years tightening like this, the breakout doesn't come in small percentages. It usually comes in waves. And the crazy part is, I personally think we're still early. If Rivian continues to hold above that breakout level, the next logical target sits much higher. That's 24 to 26. And beyond that, the setup opens up even more, in my opinion. This is the type of setup that doesn't just pop. So yes, we're up almost 70%, but from a chart perspective, this is still just the beginning. Patience always pays when the higher time frame finally wakes up. By the way, if this kind of analysis help you guys, I send deeper breakdowns every week to my email list. It's completely free. It's where I share the setups I'm watching before they move. If you want that, the link is in the description. Next on the watch list is ASST. Let's talk about the chart because it's one of the setups that looks quiet on the surface, but the structure underneath is telling a different story. We've been watching this thing base for weeks now, and the same pattern keeps showing up. Higher lows forming inside the tight wedge. That's pretty much buyers stepping in earlier, each time absorbing whatever selling pressure is left. If you've been watching, sellers been trying to push this even lower, but every dip keeps getting scooped up. Volume is fading as well, and that's exactly what you want to see during a bottoming phase. Weak hands exit and then strong hands accumulate. Now here's where it gets interesting. Right above it is a massive gap waiting to be filled. That gap is basically a magnet. Once price breaks out of this compression, momentum traders are going to start chasing it, algorithms are going to join in, and suddenly the chart that no one cared about becomes the one everyone is tweeting about. But this is why you prepare early. Most people ignore charts like this because once again it looks boring until it doesn't, and that's where swing traders who understand structure make their money by being early and not by chasing moves after it happens. As long as price continues to hold these higher lows and respect the space, the setup remains bullish in my opinion. A breakout of the wedge opens the door for a much bigger move into that gap, and when that happens, it won't be a small reaction. Gap fills rarely are. Next on the watch list is ticker symbol FGL. This chart has been stuck inside one of the tightest consolidation zones I've seen in a while. For almost 2 months, price hasn't broken outside this wedge, and that alone tells you something important. When a stock sells off hard like this one did, you usually expect continued validity, but instead it flattened out and started building a base. That's the first sign that sellers are exhausted. Inside that bigger range, we now have a descending wedge forming, tighter highs, steady lows. that pattern almost always means one thing, and that's pressure is building. What I like here is that the stock isn't making new lows anymore. Even with low volume and no momentum, it continues to hold this bottom level. That's early accumulation and not something to overlook, in my opinion. The setup is simple, range is established, price is compressing inside this wedge, volume is drying up, and a breakout towards the top of the range opens the door to 60 to 70 cents. This isn't a chase setup like most of the day traders you see on Twitter are doing. This is more of a sit and wait type of structure where the move happens after everyone gets bored. Once this wedge breaks to the upside, it has plenty of room to run back to the top of the range, and from there, momentum could carry it even further. For now, it's just about patience, letting the chart do what it's trying to do, and then build the energy before it releases. Now, if you want to take this deeper and trade these setups with me, that's exactly what we do in my Discord. Live breakdowns, watch lists, swing setups, and full education. If you're serious about leveling up, join through the link below, and I'll catch you guys in the next video.